Hi there, welcome to Grain TV. It's Wednesday, August 31st, another down day in the market. Soybeans trading 8 days lower now. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, beans on November were off 9.5 cents, closing at 9.41. Corn was off half a cent, and wheat in Chicago on the D's contract off 1.25. News today was pretty light. There was some good news out this morning. Yet again, some more flash sales announced by USDA, but this time for more than just soybeans. We got the usual soybean business totaling 187,000 metric tons today to China. But on top of that, we also got a 275,000 metric ton deal to Mexico, and making a rare appearance on the flash sale report was hard red winter wheat, 138,000 to unknown destinations. But even those flash sales weren't enough to sort of stem the tide that is the bear market in grains these days. Other news out, Egypt continues to baffle world wheat traders. First of all, on Sunday, they went back to their policy of having zero tolerance on the ergo fungus, and that set off sort of a reluctance of wheat offers in their latest tender. So their latest tender calling again for more wheat, but sticking to the restriction that they would have zero tolerance for any ergo fungus in those wheat deliveries. They only found one country or one company willing to offer up wheat, and as a result, they actually canceled that. So Egypt, the world's #1 buyer of wheat, continues to sort of baffle the world wheat market with their policy on ergo fungus. That's certainly not supportive in a time when we have burdensome global wheat supplies. Other news, we had EIA data not only for ethanol but also for crude oil. This was negative again for the second week in a row for crude oil as stocks built higher than what analysts had expected. This week's number coming in at 2.2 million barrels higher than last week, versus about a 0.6 million barrel build is what traders were looking for. Also, gasoline inventories, while lower, were not as off as sharply as people had expected. So overall, the crude oil market took it really sharply to the downside today, giving up $1.60 a barrel. Let's take a look at those EIA ethanol numbers. These were off from last week in terms of production, and stocks were up from last week. That's bearish, but the good news is the weekly grind still coming in of over 1 million barrels a day. That is very good, especially at this time of year. But of course, we have very, very large corn stocks for the corn plants to work with, so it's not surprising they are pumping or grinding as quickly as they can. Let's switch gears and take a look at the November soybeans, which continues to really defy the odds of going higher here. We've had 8 days in a row now of lower trade, and we are flirting with that 940 mark. We touched briefly below it today, trading a little bit in the 939 zone, but we closed the day around 941. So that's going to be sort of the intermediate or short-term support here to break through that. But I wouldn't be surprised to see us break through that and eventually go back down to the 915 mark. It is a market that is primed to move lower. Keep in mind that we had a really, really impressive run up in the late winter, early spring as a result of South American crop problems, but that bubble is starting to burst on the expectation of very, very large soybean supply. So even though we have very good demand, which is long-term supportive, right now everyone is focusing on the very high potential for a large crop this year, and not only in the case of beans, but also in corn and wheat, which obviously most of it's in the bin. But we have certainly a situation that's shaping up for a very, very negative or bearish harvest situation this fall. That's all we've got today on Grain TV. As always, if you'd like to learn more about how we can help you in your own grain marketing situation, visit us online at grainhedge.com. As a Grain Edge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.